Dr. Pick welcomes you to the channel. And today in the program about former NY Fed president argues Bitcoin could undermine USD, suggests prioritizing regulatory framework. Bitcoin has recently surged past $100,000 following Donald Trump's election victory. Amidst broader market sentiments, the crypto community eagerly anticipates that Trump administration will prove to be pro-crypto and will stand behind his promise of a strategic BTC reserve for the United States. Advocates believe it could serve as a hedge against inflation and a diversification tool in portfolios. However, Bill Dudley, former president of the Federal Reserve Bank of New York, has criticized Bitcoin's role as money, describing its volatility and lack of income generation as its shortcomings. As per a latest Bloomberg report, Bill Dudley, former president of the Federal Reserve Bank of New York, has expressed concerns over the idea of incorporating Bitcoin into the U.S. national reserves and argues that it would not benefit most Americans. He emphasized that such a move might not align with the nation's best interests and could divert focus from more inclusive economic policies. Can Bitcoin undermine USD's status? He noted that incorporating Bitcoin into the U.S. national reserves could undermine the dollar's status as the global reserve currency and primarily benefit specific interest groups rather than the broader American public. Notably, Bill Dudley stated that Bitcoin is a weak asset, noting reasons such as price volatility, lack of widespread acceptance as payment, and slow and expensive transaction processes that make BTC a weak asset. He also noted the risk of individuals losing access to their Bitcoin holdings and that, unlike traditional financial assets, Bitcoin does not generate income through interest or dividends. Bitcoin is not connected to any cash flows like interest or dividends, and its price is driven purely by speculative demand, he explained. The former Fed chair also noted that the absence of an exit strategy for a Bitcoin reserve would make it a liability. The government would end up holding tokens that produce no income, offering no real value to the majority of Americans, he said, suggests to focus on comprehensive regulations. Notably, Dudley argued that creating a Bitcoin reserve for the U.S. would require the Treasury to increase borrowing, raising debt servicing costs or requiring the Fed to print more money, ultimately fueling inflation. Instead of focusing on Bitcoin as a reserve asset, Dudley has called for the Trump administration to prioritize creating a robust regulatory framework for the crypto industry. He stressed the need for clear rules to protect consumers, regulate stablecoins, and prevent the use of cryptocurrencies in criminal activities. Crypto technology has the potential to improve the financial system, Dudley noted. However, without strong guardrails, fraud and abuse will continue to undermine trust and hinder progress. Market optimism prevails. Nevertheless, there is market optimism amidst expectations of a more crypto-friendly administration. Also, the nomination of digital asset-friendly Paul Atkins to chair the SEC provided the final boost as Bitcoin surpassed $100,000 to record highs. Recently, Trump nominated venture capitalist David Sacks as the White House AI and crypto chair, who is expected to push Trump's crypto and AI pro-innovation plans forward. Thank you for watching this video. Leave your comments and see you soon.